And buenos dias, GNGs. I am Trekkw2ks, if you don't know. This is the Weekend Crypto brought to you here on the Gentlemen of Crypto YouTube channel. And I basically cover some news events that happen between the Friday evening and the Sunday. And then we wrap it up for a Monday rebroadcast. And so we're going to jump into the headlines that I said before. And here we are. The first one: how Spain could force crypto holders to close their funds. So Europe definitely is moving as a whole in certain regards, and then each individual country is moving in its own way of how they want to deal with cryptocurrencies through regulation. What got me with this is another example of regulators and legislators who are voicing their thoughts and then making recommendations on how to do proper regulation, or at least some kind of bootstrap regulation, but they don't understand the tech. This is the same thing that I noticed in listening to the recent subcommittee hearing on the future of digital assets with Charles Hutchinson and what's his name, the founder of Chainalysis. Charles, the professor, and somewhat of the founder for Chainalysis were the only ones that are really addressing the tech. My point is that these legislators, these regulator folks, are making rules and not understanding the tech. And part of what they're also doing is making it that people only think of it in use case, not in terms of actual full capability of technology. And case in point, it is highlighted here. So let's get into this highlight. The report claims that the Spanish Ministry of Finance is currently working on a decree to change the tax general law and the personal income tax regulation. These changes are intended to come into effect as of December 31st, 2022. In that sense, Spanish citizens will be forced to report their crypto holdings, how they have invested in the nascent class, and if they're holding them locally or abroad. The Spanish Minister of Finance, Maria Luz Montero, said the following at the national news channel TVE. I'm not even going to bother with this because that's just straight talking points that she doesn't even get it either. Here's what got me in this line. This joint right here. It's digital. Let me get up close. It's digital. It's online. And if you have internet, it works for you no matter where you go. What does that mean to say, are you holding it locally or are you holding it abroad? This is what I'm talking about. And again, just to clarify for y'all, this is not actually in regulation right now, right? This is them saying, hey, this is the direction we want to go in, where we want to have basically everyone who says they're a citizen here, which I wonder, what does this mean for people who are going through the residency process? If you're a residency card holder, does this also apply to you, where you have to declare all of what you have and what you've been doing and how long and the when and the where? Does it? I don't know. And this isn't saying that this is actually going to happen, but we'll see. What is the other thing? What is the other thing? This line I'm going to read because what is it? This could jeopardize the users' privacy and provide the government with a lot of information on its citizens and their financial operations. The main regulators and the Spanish Treasury claim that people investing in the nascent asset class, 12% of their population as mentioned, lack financial culture and are exposed to scams. Now I remember why I highlighted this line. This right here was their way of saying, let me get up close. This was their way of saying that basically the public, our citizens, are dumb. They don't know how to handle money. And because they don't know how to handle money, we can't let them just go all willy-nilly and try to be economically sovereign. They said it in fancy, nice doublespeak, but it really means, hey, our people are stupid when it comes to money, which I also find ironic because the basic issue on that runs around, if you're not teaching finance in school from elementary years, what do you think is going to happen when they get to college adulthood years? People just know the basics of just make sure that you can balance the books as far as you have money to pay for things. And then on top of that, most people, not most, but a sizable proportion of people live off of debt. It's not that they actually have money, it's that they're living off of borrowed debt. But that's a whole nother thing. I'm not going to beat the horse. The point is, if you out there in Spain, it might not be looking good for you come the end of this year. Just saying, vote for different people. I don't know. Next story jumping into is Morgan Creek's situation where they're trying to outmaneuver FTX. So I'm not gonna lie, when I saw it at first, I was like, wait, what's really going on here? Are they trying to outmaneuver FTX as far as they want BlockFi for themselves? Because this is the basic thing, is BlockFi's having its issue having the money on the back end that it needs to operate. What is it? Sam Bankman-Fried is like, hey, we'll loan you $250 million. Like, we got you. But anytime somebody's like outright giving you money, especially within this part of the space, it's always some caveat. This is Mark Yusko, and he's talking about how he had to like basically call around to different people to find out like what was going on in particular with the deal. Let me get into the actual lines, the highlights on this. Cryptocurrency investment firm Morgan Creek Digital is attempting to raise $250 million from investors to purchase a majority of stake in crypto lender BlockFi, a leaked investor call from Tuesday. Yo, here's a funny thing. There were a number of leaked investor and private calls that have been going on this like last week. It's funny to me that there's these leaked calls and they have the alpha end of, so to say. Anywho, so according to Yuxo, I know I'm saying his name wrong. Let me not even cap on that. I'm saying his name wrong. But according to Mark, the deal of BlockFi really thinking that FTX deal will work out for them. He says it makes sense, but he also breaks down that there's a catch to this thing. Let's get into it. The FTX credit line proposal had a catch for BlockFi's existing shareholders. It gave FTX the option to buy BlockFi at essentially a zero price. If FTX were to exercise said option, it would effectively wipe out all of BlockFi's existing equity shareholders, including management and employees with stock options, as well as all the equity investors in the company's previous venture rounds. Yo, when I tell you the team that they got, let me get up close. When I tell you the team that they got over at FTX be on fire with the business deals, they be on fire with the business deals. So the lawyer team, the business management people, like the biz dev folk, they be on fire. I'm not gonna lie, they be on fire with it, man. Now, I'm not saying this as far as, oh, I think FTX is the greatest thing under the sun. I'm not saying that at all. I think their business acumen is fire. Do I agree with half of the stuff they do? Not really, I don't, not even. I don't really like X amount of the things that they do. But that business team and how Sam be moving through on things, you know, it's fire from a business perspective. You can't even be mad at him. You can be jealous as fuck though, but you can't really be mad at him. Nonetheless, this is a sizable article. The bottom line is that Morgan Creek is trying to make sure that they don't get pushed out of the BlockFi because they see it as having legs and being able to be something that they can get money on in the long term. And plus, they still want to get what they put in initially. That's the whole bottom line on that. Jumping on to this next story, not like super claps, but claps enough in regards to potentially or supposed to be that some people are going to get hired. Bottom line is Ripple is opening up an office in Toronto, which, as you saw in the headlines, 50 engineers. So they're basically looking for, at least the way the article has it. Let's go in. So in the face of ongoing massive sell-offs and job cuts in the cryptocurrency market, the San Francisco-based crypto startup is still eyeing expansion, unfazed by the instability. Ripple plans to employ 50 engineers for its Toronto base. One of its goals is to recruit hundreds of blockchain software developers, including data scientists and specialists in applied machine learning. Okay, hold on. Listen to what they did though. They put the caption in. They was gonna hire 50 engineers. Caveats, like this is when it comes where you gotta read into these articles, man. So it's not actually 50 engineers, because when you look at this, it says 50 engineers here, but then it goes off into other things. It might not actually be all engineers hired in the position, but hopefully nonetheless, people get hired, jobs are created, development happens. And so as far as Ripple making jobs, that's a good thing, right? Is it going to be actually 50 engineers like they're saying? I don't know about all that, but I do also give them kudos. While X amount of these other bigger companies or sizable known companies are doing the downsizing, and even the smaller companies, but the bigger companies are doing it too. The point being is you have two options or ways that you can go when it comes to your market is going down. You're either going to double down on either maintaining your overhead as it is, or you're going to cut. And Ripple seems to be just maintaining where they are and then looking to expand. And that more than likely will work out for them in the long run, because while everyone else is downsizing, which means they'll have less time to produce, to research, to create stuff, because they'll have a smaller pool of talented people to do that part of the work as well as just like researching stuff out. Your competitor is out here grinding out with the talent pool, with the resources. So it'll be interesting to see how this goes for them. Nonetheless, jumping on to this next story. If you have not been paying attention, and I'm gonna be honest with you, just coming off of the whole NYC NFT thing, it wasn't really nobody talking about this whole Bored Ape Yacht Club thing. Like I didn't go to it. I was down the street from it because I was at the Mint Black thing with a couple other folks, but you could see the crowd from the FDR Expressway. It wasn't like nobody was, like there were people who were aware of the situation. And if you don't know what's going on, it's basically there's a gentleman who made a documentary who also did a whole bunch of Twitter threads and some other things about saying that the Bored Ape Yacht Club founder people have Nazi ideology and connection, whatever. Personally, I don't really care because I don't have the token or any of the PFP stuff. But let me get into this real quick. So basic idea is that Yaga Lab ends up suing this dude named Ryder Rips, who basically did a copy and paste thing off of all of the stuff. And then he sold the stuff, which I find really interesting in that they want to then turn around and sue the dude. And I didn't actually run through and do the highlights. It's a sizable article too. If you're really interested, I can definitely, you see what website I'm on and stuff like that, so you can find it. But if you're interested in, just find me on the Twitter DMs and I can send you all of the links for this, right? The point being is they have a common use zero or a Creative Commons zero license, like IP license on their stuff, I believe. So for them to then turn around and try to sue this dude to be like, oh, like they have a bunch of things that they're saying that he's doing, which is the trademark infringement, the unfair competition. I don't understand that part. The unjust enrichment, conversion, and I don't know what the tortoise inference is. But this is basically what they're saying this dude did, in part because he got the drop on them for this domain name right here, which is the name of one of the founders. And so it's a whole bunch of stuff going on right now where he already made the money. He made like over 1.5 million on basically doing a copy and pasting of all of the Bored Ape Yacht Club stuff. And then apparently during NYC NFT, he ends up saying the same thing that the other guy, Phil something, has been saying that they have the Nazi connection. So now they turn around and they sue him. I'm just throwing it out there because this is a part of the news cycle thing. Personally, I don't care. I think that for all of the things that we know in history have horrific, I'm gonna get close. For all of the things we know in history that have horrific origins, we commercialize them. We make them in the holidays. We make them into like doctrines and things that we teach in school. And this is the stuff that people want to get up in arms about. I don't got time for it. But if you a Bored Ape Yacht Club holder, if you a token holder, yo, I'm not telling you what to do. I'm not. Either you believe it because you watched the documentary, you read the Medium article or the LinkedIn article or the Twitter thread, whatever. You believe it or you don't. You still gonna rock with it or you not. All I know is humans is some funny creatures. And for the things that we get on with, even when we know it's bad stuff, I'm not even amazed about this. And I'm not even saying I believe it. I just think the irony of them then turning around and trying to sue the dude off of the whatever. Anywho, I'm moving on to this next story. Another company in Australia is like biting the dust, right? So there's this company called Bitpanda, which is basically laying off 1/3 of their staff. Yo, like this part right here got me. They disclosed that they're gonna drop about like 730 people, 34% of the workforce. But then it turns out that when you do X amount of the researching around, at least according to this article, they got about 1,000 employees. So they are knocking off a sizable amount of their people, which means they're probably on the way out the door. That's what that means, bottom line. And so this is a part of the whole trial and error fell forward. This is what happens when you make a business model that is based on a speculative space or what has turned into be a speculative space, and you don't have other things that work out to bring in revenue for what your business is. If you're just solely going off of trading and being a gate guard, let me say that again. If you're just solely going off of trading and being a gate guard, and charging the gate guard fee, but then people figure out they don't gotta go through the gate guard anymore, or the people who still wanna deal with the gate guard, it's less of them doing it, guess what happens? Your business suffers. So another company biting the dust, pretty much In regards to this Australian company, again, if you out there, you might need to start figuring out some other thing to do as far as how you're going to get into this crypto stuff. You might want to actually find some more peer-to-peer related things. Just saying. Jumping into this other story, and this goes into Bitcoin adoption, crypto adoption, and we just seeing like on the retail side of it, hey, more crypto ATMs are going to be in the US. Here you have it, that this, what is the name of this chain? And I'll be honest, I don't actually know the name of this chain. When I was reading the article, I couldn't recognize it. But anywho, despite the volatility of the cryptocurrency market, digital assets are growing in popularity, leading to the emergence of crypto ATMs where users may purchase and sell digital assets. KRBE Markets, the largest Hispanic supermarket chain in the United States, is slated to have these machines. CoinCloud, a provider of Bitcoin ATMs and digital currency machines, has teamed up with KRBE Markets to offer its users the chance to buy and sell Bitcoin, Ethereum, and over 50 other digital keys using cash. Here's what I want to say. Let me jump in on this because the rest of the article don't even matter, because if it ain't in your state, like, it don't matter to you. CoinCloud has been on the grind. I can tell you they have been on the grind here in Maryland, because now they partnered up with Royal Farms. So they definitely out here doing a thing. Hand claps for adoption and it making it out into the bigger society and stuff like that. I definitely will say this is a good thing in regards to that. And if you into trying to figure out some things to do for bringing it to your local area, this might be a company you want to look in. Just saying. Where's the other thing that, okay, this was the actual state. So the locations are going to be Arizona, California, Nevada. Yeah, so those 3 states. Now, CoinClouds is like everywhere, but in regards to the particular supermarket they're talking about, those are the only 3 areas that they're in that are going to have the ATMs. But come next year or whatever, it'll be some more places. So jumping out into that. All right, and then this last joint that I want to cover is not an article, but it's something that popped up while I was at a Bitcoin meetup barbecue over the weekend. And we're literally just sitting around talking about whatever. And then the host is like, hey, did you see this? And he shows me the Twitter thing. So here you have it. Ryan Shell puts out, I'm not sure if CoinDesk can comment on Genesis, but it does look like 3AC will wipe out BlockFi, Voyager, Celsius, and is likely all of Genesis lifetime revenue. Fortunately, they have the D balance sheet behind them. And the reason why I brought this up, and I'm gonna close out with this as the last story, but the reason why I brought this up is that it's a lot of things coming to light right now about the way the money was being mixed around on the back end. And I was saying this at the meetup I was at yesterday, where it's like, is it me, or does it look like we basically had the same behaviors in the traditional finance that led us to the housing bubble and all of the stuff from the 2008 period? We had the same mentality move into the space, and they did the same dumb shit on the back end. Mixing pots of money together, who's over here at the top end of the value chain with the money, and then you trickle it down over here. And I feel like somebody, and this is totally my woo-woo conspiracy on it, somebody was just sitting back and waiting and be like, all right, if I mess with this part of it, it's going to affect over here. It's almost like there's a coordinated effort behind the scenes to make the issue in order to bring in the regulation. And that's how I'm looking at it. You don't got to agree with me. Remember, this is not financial advice. I'm just some guy on the internet who happens to pay attention to a fair number of crypto and blockchain related stories. And I just throw them out there to y'all. There are certain patterns and trends that I see in things, and sometimes I'll bring them up. That happens to be one of the things I'm questioning right now. But nonetheless, this is Week in Crypto. I am Trekkw2ks. This is brought to you here on the Gentleman of Crypto channel. Please like, subscribe, share it, tell a friend to tell a friend. Also, lurkers and the scammer folks, I appreciate y'all, because we see that the numbers are still working because people are watching. We know that the algos is messing with us. It is what it is, but nonetheless, appreciate all y'all. Thank y'all very much for tuning in. Don't forget, share, like, and tell a friend. Hey, we here and we're keeping the receipts. All right, y'all. 1.